CNBC-TV18.
Hello and welcome to the show. Today we have with us the top team of Blackstone Real Estate with us. Let me welcome on the show Ken Caplan as well as Tuhin Parikh joining us on the show. Welcome, gentlemen. Always a pleasure speaking to both of you. Ken, help me understand from the global perspective, how are the macros stacking up when we look at the real estate space? And from the Blackstone's point of view, how is real estate investments looking at this point?
Well, first, I'd just say thank you for talking to us. It's great to be here. It's great to be in India. On a macro standpoint, we're in this uncertain time, right? A more challenging environment. We have COVID still creating disruptions. We have obviously geopolitical conflicts happening. Yes. We have rising inflation and rising interest rates, and that's creating a more challenging backdrop and challenging environment. Yes. In terms of what's driving that, right, we have demand that's been increasing. I mean, I'm based in New York in the United States. We're seeing, economy reopening after COVID, a tight job market, a lot of fiscal stimulus that really stimulating a lot more demand than supply can keep up with. And that's obviously triggering inflation. With higher inflation, you're seeing higher interest rates. And with higher interest rates, we're seeing in the U.S., the Fed trying to tamp that down. And that's creating an environment where people are questioning, how much of that tightening do you have and what does that mean for growth? In general, we're seeing slowing growth in the U.S., slowing growth in parts of Europe, obviously, again, with the Ukraine situation, and slowing growth in other parts of the world as well. But yes, that's generally what we're seeing. Here in India, actually, you're seeing greater growth. You are seeing that inflation and some higher interest rates, but you're seeing a higher level of growth, which is actually really encouraging and positive here in India. In terms of real estate, real estate has been a good place to be historically in a higher inflationary environment, right? Real estate's a hard asset. When steel and lumber and energy and labor costs all go up, those are all inputs to building buildings, the type of buildings that we own. So when that gets more expensive to build, it inherently suggests that there's greater value, greater supporter of value for real estate. It also mitigates new supply. So that's generally been a positive. Yes. And real estate's generally viewed as an interest rate hedge or providing interest rate protection, because if you look historically, real estate cash flows have kept up with inflation. Again, if you look at the U.S. over the last 25 years, it's actually outpaced inflation. For us in our business, we don't just buy the index. We are high conviction, highly thematic investors. And when you look at, again, those cash flows outpacing inflation, it's been very uneven. Yeah. So our biggest theme has been logistics. It's about 40% of our global portfolio. Yes. That's well outpaced inflation. Yes. If you own malls, well, that's been a very positive thing here in India that hasn't been so positive in the U.S. So depending on what you own, you've been able to well outpace inflation. Yes. Again, we're high conviction, highly thematic investors. About 80% of our portfolio is in logistics, residential, life science office, and hotels. Yes. In each of those sectors, again, I look to the U.S. because that's our biggest single market. Each of those areas, you have market rents outpacing inflation by 2 to 4 times. And to us, where you want to be is, again, for us, real estate, hard asset business, where you have pricing power, where you have the stronger tailwinds, stronger fundamentals, where you can drive revenues and really benefit from that inflation on the revenue side, while hopefully minimizing the negatives of inflation from the expense side. Right. Unfortunately, that's where we are with our portfolio.
So very good overview of the several markets. But here in India, while your focus has been on logistics, but here in India, you're the largest owner of office space. And how is that shaping up at the moment, given the new changed macro environment? Being a $20 billion portfolio manager, what are you looking at?
So, as Ken mentioned, we are highly thematic investors. So we invest on what we call long-term trends. So in office, the trend that we're investing on is the fact growth of the offshoring and IT outsourcing business in India. Yes. Now that honestly has accelerated during COVID. So we had work from home issues, but the hiring pace has doubled in India in the last couple of years. That's extremely good underpinning of fundamentals of office business. Yes. And we're seeing that now as people are coming back to office, demand for office is actually quite strong.
Yes.
And we are seeing that recovery across our entire portfolio in office, retail, where recovery has been the strongest so far, where people are going out to shop, to consume, to see movies. Our malls are performing much better than they were at peak at 2019.
Right.
And then our newest portfolio, where again we are one of the largest owners of warehousing, where the e-commerce tailwinds and GST leading to formalization of the Indian economy is really propelling, new tenants coming in space and take up of space.
Yes. So these three areas are now, of course, it has been a challenging moment when the entire COVID lockdown was taking place. But Tuhin, are you now certain that even though there is hybrid model, but the vacancies, it seems, have been dropping, how are the rental pricing stacking up at this point? That will give us a sense of the entire rental business that you have.
Right. So, when COVID hit, obviously people, the world came to a standstill for a few months. People didn't know what was happening. And that point in time, there was high level of uncertainty, whether people ever come back to office, what will happen. I think two trends have come out. One is people may want more flexibility in their work life, but the fact that office center of your work life has also become reality. So we see coming back to office, and office being a part of people's work life, not going away.
Okay.
Right? And given rental pressures is, as Ken mentioned, inflation is increasing the cost of producing the same assets. The interest rates is reducing the amount of development people can do.
Yes.
Therefore, we actually see rentals firming up in India because replacement costs are going up. The same office building takes 20%, 30% more to develop than it took 2 or 3 years ago.
Yes.
So, that's pretty good underlying fundamentals for existing stuff that we own.
Right, and I would say that even currency depreciation could impact because 80% of the rental space is really taken by the foreign players.
So currency depreciation is helpful to us in two ways.
Yes.
One is it makes India a more competitive destination as far as offshoring concerned.
Yes.
And that we are seeing from the number of RFPs that we now see for taking up space in India and the hiring strength we are seeing. So that's good for that.
Yes.
And the good part about currency depreciation also is that it increases the price of imported materials and therefore pushing up price of developing the new assets.
Right.
Therefore, when we see currency depreciation, we also see the silver lining, which is increased long-term rental growth.
Right.
That kind of follows that.
Right. So this is the status and the recovery that we are seeing after COVID era, Ken. But given the macro environment changes, does your strategy in India change? Because you went through a phase of really buying and beefing up the portfolio. Then a little bit of monetization has already taken place in the second phase. And the market has already consolidated when it comes to commercial real estate in India. There are few big players with large assets. How do you see the India strategy for Blackstone Real Estate now?
Right. So it's a good question. I'd say for us, what we look at, and partly what I've been doing here during my trip, is to meet with our portfolio companies, with our team here, and with our partners. One of the benefits that we have is, here in India, we've had this established business. We've been in India for 16 years. We built up the largest office portfolio. We have this retail business as well, and now we're sizable in the logistics space. And we see just how strong the fundamentals, as Tuhin was just talking about. And as a global business, we're the largest global real estate owner as well. We have over $500 billion of real estate value in our portfolio. We have a unique perspective and unique capability to both identify and action opportunities, and we have this architecture or one globally connected business. So we see how strong the fundamentals are in one space like e-commerce, for example, and what that does to a space like logistics, and what that happens country after country. And we see India, and we see how early stage e-commerce growth is, for example, in India, and we say, okay, at only 6 or 7% of e-commerce penetration for e-commerce here, and an area that's growing at 30+% a year over the last 5 years. And we just know from what our experience has been in the US, in Europe, and other parts of Asia, what happens as that e-commerce growth continues, and what that means for demand for logistics space, and what that means for underlying fundamentals. We're at record low vacancy rates, record rent growth in the US, in Europe, and other parts of Asia. And it gives us enthusiasm, even though we have already done quite a bit here, for example, in India, to do a lot more and to grow that. And when we see the strength in the office space as well, wanting to continue to grow in that area as well. So yes, there's been some consolidation, but there's still immense opportunity here to continue to grow the existing verticals that we're in, office, retail, and logistics, as well as to get into some new areas that we feel are exciting, again, from what we've seen in other parts of the world and where India is in terms of life cycle of opportunity.
Which are those? Are they more hospitality, data centers? Which are the areas, the new areas where you're focusing more on for more investments?
Well, those are definitely two that I would have said at the top of our list. So hotels are an area that we've been investing in since the beginning of our existence. We've been investing in real estate over 30 years, and it's what we've done from the beginning in real estate. We actually have a number of hotel investments here in India. It's an area that globally we're very enthusiastic about investing more into, and that would include India. So that would be an area. Data centers as well, frankly. I mean, you named two areas. In data centers, we bought a company called QTS in the U.S. last year. We've had great initial success, not only with the portfolio, but growing that business. And we look for similar opportunities here in India. And we're studying other areas to grow in as well. But those are two good examples. And again, that's partly why I'm here and what we're constantly looking at, where those opportunities, where those strong tailwinds could be. We say the good neighborhoods where we want to invest, where again you have, particularly in this environment, that pricing power and where you can drive outsized growth and performance.
How about a world which is in tune with your world? Bob World, where you can save, shop, borrow, invest. Bob World. We live in your world.
Indulge in the luxurious, the most spacious, and supremely comfortable BMW 3 Series Grand Limousine. Welcome to the grand side of thrill.
Ideas that will shape the global economy. Insights that will restore global trust. And interactions that will shape the new global order. We've been bringing you all of this and more for the last 2 decades. And we're back again. CNBC-TV18 gets you an appointment with the world's most powerful thought leaders. Get all the action unplugged from the epicenter of global power. We don't just bring you live coverage of the World Economic Forum's annual meeting. We live the Davos story.
Presented by Bob World from Bank of Baroda. We live in your world.
State partner, Government of Telangana.
In association with Innovity, purchase partner to every Indian.
Dell, your business journey never stops, neither do we. Globe Capital, money must grow. And General Air Conditioners, the extreme machine.
The world is watching over Telangana as it is becoming the IT hub of India. Telangana IT and Industry Minister K.T. Ramarao led the Telangana delegation at the World Economic Forum Davos in 2020, where he showcased the scope of business opportunities in Telangana and clinched an investment deal of more than 500 crores. Recognizing the revolutionary IT and industrial growth of the state, the KCR government is again invited to the World Economic Forum Davos 2022.
बनाने वाले से डायरेक्ट सामान लो तो सस्ता पड़ता है, जैसे कार इंश्योरेंस डायरेक्ट ACO से लो 50,000 तक सेव करो.
Check ACO app now.
Unmatched leadership, unchallenged legacy. CNBC-TV18 is India's #1 English business news channel. Follow the leader.
Presented by Bob World from Bank of Baroda. We live in your world.
State partner, Government of Telangana. in association with
Innoviti, purchase partner to every Indian.
Dell, your business journey never stops, neither do we. Globe Capital, money must grow. And General Air Conditioners, the extreme machine.
How much are you looking at deploying in India, and has India's role or India's participation in your overall global portfolio notched up given your bullishness on the Indian market?
So Ken's visit here points to the fact that we are highly enthusiastic about investing in India and growing our business. In our portfolio is $20 billion in India today, but the key factor is in the last 5 years we added $12 billion of assets. And we hope to continue the pace of investment over many, many years to come. Right? And therefore, we remain enthusiastic investors in India's growth.
Yes.
And I think we'll continue participating in it for many years to come.
All right. Do you have a figure, how many $1 billion you're looking at investing, or will it be more monetization as this phase of growth for Blackstone?
For us, we don't start with a target, right? But we started the business 16 years ago with zero. We need $20 billion in 16 years, of which we achieved $12 billion in 5 years. So you can do the math if we keep the same pace of growth going.
Yes.
We don't want to slow down.
Okay.
And as far as monetization is concerned for us, we are fiduciaries. We need to return capital to investors at some point in time. So we invest and we exit investments as they mature. And we've done public sales of our retail stock, which is public news. We've done recapitalizations. We've done private sales. So we've done all. So India has been a great investment destination for us, and a destination where we produce good returns for investors.
By the way, I would just add that we're both focused on real estate, but we have a private equity business that's also been really active and really successful and wants to continue to grow here as well. When you look at the real estate and private equity business together, I think it's $60 billion of assets that we have in the country, and that in both areas we want to continue to grow and real enthusiasm for India.
Yes, Ken. In fact, private equity has been quite active as well, along with real estate space. But Ken, looking at India's monetization, and the proof of the pudding is in getting returns out of the investments you make, right? So I want to understand from the global scheme of things at Blackstone headquarters, how does India position when it comes to the returns parameters, and what are the expectations going forward?
Well, India has been a great performing country for us. We've had a lot of success, again, across the different verticals we've been in here. Office has been where we've been investing for the longest. We continue to invest, but we have returned capital out of our office investments too successfully. And I'd say our returns in India stack up very well for our global business, and it's obviously a big part of why we continue to be enthusiastic, investing more capital here. And I would expect you'll see us continuing to invest and return capital. It's a buy, fix, sell strategy in our opportunistic business, and you'll see us continue to do all three of those things as we look forward.
Right. So Tuhin also mentioned about the monetization aspect. So Tuhin, let's reflect on the REIT aspect. It is a fairly new concept that came up in India, and you were the first ones to really have the confidence to take the plunge. And now we gather that there could be more REITs in the offing from your portfolio. You've created separate platforms for different commercial businesses. So is Nexus Mall on the anvil, and what is your plan in terms of some of the other REIT rollouts and exits?
So I can't comment on whether we'll do more REITs or not, but let me tell you a little bit about the REIT journey that we walked.
Yes.
As you mentioned, that we worked with the government many years. The regulator was very supportive.
Yes.
We did the first REIT and showed confidence in the product. And, it's been 3 years since we listed Embassy REIT. And the reality is that the REIT has given returns of almost 14.5%, 15%, while the broader market has given 200 basis points less than the REIT.
So it has outperformed the broader market.
Outperformed the REIT in market, outperformed the broader equity markets. And we also, the other thing we've seen that the enthusiasm for the product has increased dramatically.
Yes.
When it is our first REIT IPO, since then the number of retail investors in our REIT has grown up 8 times. And subsequently using the REIT, we did the second REIT, the third REIT, I think many more will happen in the country. But more importantly, the government has also used this vehicle to successfully carry on its own asset monetization program. We have Power Grid listed, NHA had done an Innovate. So, what we are pretty enthusiastic about the fact that we created a product for deepening the capital markets and a process that, capital markets have access to what we consider inflation hedge products, which is what I think a great achievement was. And it's a vehicle for monetization. Is not the only thing we use, but it will remain, kind of core to our strategy going forward.
Right. And do you also foresee any challenges in terms of exit opportunities given the macro environment right now?
The macro environment is challenging, for all the reasons that Ken mentioned, but enthusiasm for India remains quite high. And we see that among all the global investors investing in India today. So as long as the growth rates in India remain high, I don't think people will be so worried about inflation or the rupee depreciation. And I think so far what we are seeing as we're coming out of COVID, for India the growth prospects remain pretty bright. So if that continues, we don't see that many liquidity challenges in India.
All right. So India-based growth opportunities remain strong is the word coming out. But Ken, looking at the present, opportunities and new themes that have been developing, sustainability has been a very big theme. Now, construction, real estate, these kind of areas are not really well known for ESG compliance. But how is Blackstone in a meaningful way contributing to this, especially in your mode of investment as well as your portfolio companies?
Right. So ESG incredibly important, to who we are, to how we operate, to what we do, and to delivering long-term value to our investors and creating value in our assets. So we are focused on the E, the S, and the G. As a firm, we made a pledge to reduce carbon emissions by 15%, investments where we control energy consumption, and we have a real concerted effort with dedicated resources. We have an ESG team within real estate, a global team in US, Europe, and Asia, working together, working collaboratively with other parts of the firm and with our portfolio companies.
I want to understand one more aspect, Tuhin. How is India placed when it comes to the ESG compliance, especially in the portfolio companies that you see or investment targets that you are looking at? Green buildings, green data centers, how big a reality is that?
Actually, in India, we are quite high on the ESG compliance because Ken mentioned for us, it's good business. So, one is we have 170, as Ken mentioned, we have 175 megawatts of solar parks, which we invested ourselves and built ourselves to provide green energy to our tenants. Besides that, most of our office buildings, more than half of our office buildings, either LEED Gold or LEED Platinum. Right? And therefore, we're pretty focused on reduction of energy consumption. And then we work pretty hard with many of our communities on improving a community. One Green Mile will be an example. We work with government schools in Bangalore. In Bangalore, we built a flyover outside one of our parks, which we paid for to improve the traffic congestion. We paid for skywalks to ensure that people can safely cross roads. We are building a metro station in Bangalore. So we do a bunch of things around our communities, besides energy consumption being the other linchpin of our ESG business.
Right. So Tuhin, I want to finally end with one particular outlook from your end. In each of the portfolios that you are there, or each of the segments of commercial real estate, can you give us a sense on where are they compared to the pre-COVID levels in terms of the recovery?
So I'll give you examples with our office business, where I would say 2020 when COVID hit, we were standstill. In one of our portfolios, we leased in the last 12 months over 1 million square feet of new space across 40 to 50 new tenants. And if you see in our Embassy REIT, which I mentioned over 3 years, we delivered over 15% return to investors. In our retail business, for March 2022 compared to March 19, our business was 130% of what it was in March 19. In our warehousing business, we were zero pre-COVID. We have 40 million square feet today. So these are, just give you some data points of where we've grown the business in the last couple of years.
All right. So most of the pockets are above pre-COVID levels, and the recovery has been strong in your areas of growth. And you also emphatically mentioned that rentals are also hardening when it comes to the office space. All right, so those are very important takeaways, and overall sentiment is very bullish, and more investments as well as deal activity can be expected from Blackstone Real Estate. So you'll have a very, very busy time here in India, I'm sure, but thank you so much for this clarity as well as insights on your area of business. It was great chatting with both of you. Thank you so much, Ken and Tuhin. Thanks so much.
Thank you, Nisha.
Thank you, Nisha.
Thank you, and thanks to all our viewers for tuning in.